Hello, I'm Ben Worrell, and I lead the McGuire Sponsel Location Advisory Practice. I'm joined today by my friend and colleague, John Bodur, with our global business practice, and we want to discuss a very hot topic, tariffs. Now, tariffs have made a lot of headlines lately. Their impact, their theoretical impact, their not so theoretical impact based on your favorite talking head on the news, et cetera, et cetera. So, John, for individuals like me who don't live in the international trade and tax world, what's a tariff?
Uh, from a high level perspective, Ben, tariff is basically the government who is charging tax on the goods that are imported from another country. Uh, this has certain purposes behind it, and one of the most common reasoning for tariffs is to make the domestic market to be more competitive, and I think that's what we're seeing for the most recent potential tariffs.
And we're seeing the tariff conversation as the date of this recording targeting which specific countries?
So far, we have three countries that are being targeted specifically, and it sounds like it's going to get broadened to the EU and other countries. But currently, we have uh, on March 4th, we have 25% tariffs on Canada and Mexico to be enacted. Beginning of the February, there was a 10% tariff on Chinese goods, and there was an announcement most recently, another 10% is going to be added to those. And just, to emphasize the impact of these three countries, that these are the top three trading partners of the United States. And our trade with these three countries are about $1.6 trillion, according to the government statistics. So it's substantial.
Yeah. So to recap on that, if it costs $1 to bring a product from China, it's going to cost $1.20 once that crosses into our borders. Is that accurate?
Yes, man, that's accurate. And like I said, it's going to be differing from country to country, and it'll be depending on the percentage. But with your example, yes, that would be correct.
Cool. So the higher prices on imported goods could cause domestic companies, US based companies, to look at alternative sources for those same goods, primarily domestic producers of those same goods, right?
That's correct, and we saw this in President Trump's first term. Uh, what happened is I'm sure some of us remembers the washer and dryer tariffs it was up to from 20% to 50%, and that was to make domestic manufacturers to be more competitive within the market in the United States, and uh, it makes sense from the point of United States has the largest capital market, largest consuming market. So the goal is to make domestic manufacturers and producers to be more competitive.
And we're starting to see that in the marketplace. Those are the questions that are starting to come to us right now of either foreign-based companies saying we think we need to be in the U.S. or what happens if we decide to do that. It's also local companies that are starting to say, hey, we have an operation that's abroad. We might need to be bringing that back in. So, John, the first areas that foreign businesses are reaching out to our CPA partners and some of those questions that are coming up is how will tariffs impact my business taxes and what impact would moving to the U.S. have on my business taxes? What would you say from the global business services standpoint are key considerations that CPAs or industrial real estate brokers need to be considering?
Well, it's a known fact that tariffs are going to be increasing the cost for uh, companies that are relying on external or foreign manufacturers, so to speak. And this will definitely increase their costs, lower their profit margins, and I think at this point, having a for the companies that don't have a presence in the United States and have business presence in the United States, so to speak, it will we can come into play here, and basically with the expertise that global business services and location advisory, we can provide a comprehensive planning for them and strategy. It doesn't have to be just specifically tax, but just overall a business strategy, so that we can assist them to mitigate this upcoming risk. And I believe it's not going anywhere anytime soon, and it could play an essential role for an multinational enterprise to have a presence in the United States, keep their profit margins, and mitigate that risk.
John, any key questions that either a business should be asking their trusted advisor, that CPA, or vice versa, that the CPA should be asking businesses that they know have foreign transactions, foreign business relations?
I think the most important thing to have that conversation with the client, and acknowledging that this is happening. Obviously, everybody's talking about it everywhere, and I'm sure businesses are following it very closely. And having that initial conversation and being proactive, so to speak, with their clients, I think it will add a tremendous value to the client's business. And we are here to assist any CPA that's out there listening to this with their clients and their needs to any type of international transaction, whether they need location advisory, credits and incentives, and so forth.
Yeah, and that's really what stimulated this conversation today. Was we had probably half a dozen calls within the last 2 weeks with foreign-based companies that were calling their CPAs saying, "Where should I be? We know we need to be inside the U.S. coming up here." Their first question is really, what state has the best and lowest taxes for me? And that's where, from my standpoint with location advisory, say time out. That's probably the wrong question to be asking first. It's a good one to be asking, but it's probably the wrong one to be asking first. What we're looking at from location advisory is, what is your business? What types of investments are you looking to make? How many jobs? Are there particular skill sets for those jobs that you're looking for? Because that really starts to dictate where we might direct you, because that's going to impact more of your business operations rather than just the tax picture. Other things like, what's the average wage? How price sensitive are you on that for your end good that's being able to go back out? Do you need to be near a highway? Do you need to be near a water port, maybe an airport, to be able to get either executives in from outside the country or raw materials that you're going to be utilizing? Do you have suppliers or vendors that you might need to be proximate to help with that supply chain, the logistics of all that? All those questions need to be considered before we even go to what's the lowest tax state or what's the best incentives that they can offer to me. Now is the time for those discussions. That's why we wanted to have this conversation and kind of get it out there to say, if a client picks a location, if it starts to move there, we're going to be too late on the incentives discussion. We may be too late on some of the GBS discussions too. Now, you guys have a little more flexibility in that timeline. My team has less flexibility with that. But really, at the end of the day, for CPAs, we're saying, hey, if you've got foreign-based clients, or if clients are with foreign ownership, please know they're already having those conversations today. I mean, they've been having those discussions really since the fall. And as a trusted advisor, the CPA or the real estate professional needs to directly engage the client with these types of questions to ask them, what is this tariff impact having on you? How are you starting to consider where you might be going from here? And then that's where our additional experience can help support that best case scenario for that client, either through GBS or for location advisory services. So we know the tariff conversation is real. We know it's happening right now. We know that foreign-based clients are already considering potential moves to mitigate the tariffs and that impact on their business. Anything else that we're missing that folks just need to be thinking about here today?
I think one thing that, while we're closing out, I'd like to mention is there are tools like transfer pricing and intercompany journal entry adjustments and so forth to mitigate these risks and basically dampen the effects of the tariffs. And it just needs to be in a compliant way and needs to be supported by the appropriate documentation. And with our collaboration, we can have a comprehensive planning for a client to be able to accomplish their enterprise's goals and mitigate their risk.
Thanks, John, for that insight, and thank you all for joining us here today. If folks have questions or need other insights on how the tariffs might affect clients' operations and investment decisions, please reach out to either John or myself. We'll continue to watch what happens in this area and provide updates as we can. Thanks for joining our conversation today. For more up-to-date information on the ever-changing tax landscape, please follow McGuire Sponsel on LinkedIn, X, Instagram, and Facebook, or visit McGuiresponsel.com. Thank you.